Welcome to Multiple Offers, a real estate show with competing perspectives. Today we are talking about alternate lending.
Put that coffee down.
If you're good at something, never do it for free.
How'd you get the gig? Oh, you know, they were hiring. It was only a 2-week course.
I will sell this house today.
What are you, some kind of real estate agent?
Oh, he's a realtor. There is a difference somehow.
This is Multiple Offers, a real estate show.
All right, guys, it is episode 28 of Multiple Offers. It is Halloween Day on the day that we are recording this, so hopefully when you are listening to this, you are full of your children's candy. And we have a very special guest, our first returning guest, Stephanie Barritt. Welcome back to the show.
Well, thanks for having me.
I believe you were our first ever guest.
It's true.
Yeah. So it makes sense that you would be the first returning guest as well.
Happy to have you back.
Yeah. For those of you who don't know, Steph is a fantastic mortgage broker with Mortgage Alliance.
Oh, Jeff.
Did I get it wrong?
You did this last time.
Why do I always think you're with Mortgage Home Architects? What is your...
No, keep going.
So close.
You're just Stephanie Barritt to me, mortgage broker to the stars.
Well, I'm with Mortgage Architects.
Architects.
Yeah.
What did I say?
Mortgage Alliance, then Home...
Mortgage
Architects.
Home. Architect Home.
I did get... I got architects.
That was
Sure.
pretty gross.
Yeah, yeah. Anyway, if you don't know, Stephanie is a fantastic mortgage broker. The first time we had her on the show, we were discussing mortgages in general. Matt, what episode is that?
Episode 6, Show Me the Money with Stephanie Barritt.
Yeah, which is one of our most listened to episodes of all time. So if you want to hear the general stuff, today we're going to get into all sorts of things with alternate lending in a little bit. And I think Matt and Jer probably have some other questions for Steph. But before we get into that, what's going on? Jer, the audience can't see, but you are dressed up. Are you a llama?
It's a pug costume. I got it from Metrotown.
Okay.
It's extremely hot.
Yeah.
You wouldn't think.
Your commitment to this bit
You
for
wouldn't
radio.
think that head-to-toe fleece would be warm indoors.
It's a fuzzy fleece thing. It's a pug. It has a tail. It has googly eyes, which the little baby Rosie loves.
Your baby.
It confuses people's dogs. My baby. Yeah.
Okay.
All sorts of dogs.
Your dog?
It looks so lifelike and realistic that they think I'm a real dog.
You get any high fives walking down the street as an adult wearing a costume?
No, but I was having a donair for lunch at the new donair shop.
Oh, that's deadly in a costume.
Yeah, no, it was very well composed, well wrapped, double bagged the donair, grilled the donair. It was really good, and like a curried lentil soup. But also there were some of the other patrons that came in wearing costumes too, so I wasn't kind of this weirdo. I guess Halloween you can't be weird wearing a costume. It's the one day you can't.
It's your day to
You're
be
allowed.
weird.
So I have been rocking
this is the new Donair shop right up by the Rivers Reach and
on
7-Eleven
6th Street. Yeah,
Under new ownership. Big
under
change.
new ownership,
and
night and day difference.
way better than the last one.
Way better.
Okay. Did they get rid of that frowny face sign when you entered that the old shop had?
I don't know.
I don't know.
But it's worth a shot if you're in New West. Go check it out.
Huh. Very cool. Steph, what's going on with you?
Not a heck of a lot. Just,
Yeah?
I had, like I said, training this morning for new mortgage software. That's always exciting.
Is it
times.
wicked awesome?
It's actually really good. It's going to actually allow clients to go right into their portal and upload their documents securely, directly, instead of emailing or faxing or having to scan.
Yeah.
It's just it's a little more secure.
Is that something that you have, like for your clients, or is that like every mortgage broker has it? Is it like a
Everyone with Mortgage Alliance.
Yeah.
Architects.
Yeah, you're pumping the wrong company.
Somebody at Mortgage Alliance is just like,
Oh,
yes.
they're loving it.
Are they
Yeah.
even? Is that even a company?
It is.
Oh.
Way to go, Jeff.
What was it called? It's called your new program you were telling us about before we started recording is High Velocity.
No, it's just called Velocity.
Velocity.
Yeah.
When you said you were doing velocity training, I totally thought it was like a workout.
Yeah, I
thing.
wish, but no.
Yeah.
No, it's software.
Yeah.
Always good times.
Maybe less exciting
A
than
lot
what I
less
was.
exciting,
yeah.
but will definitely help streamline things in the long run.
Okay.
More for my assistant than me, I think. Jennifer's loving it, but yeah, it's pretty skookum system.
So the clients can upload their, like, I need your T4s or T4As. Am I saying that right?
Yeah, T4s or T4As. They can put them right into the system. And it actually is also going to have a link. And this will be the next round of training where I can even, with authorization, go into or help a client go right into their bank account right through the system and upload bank statements and that kind of thing.
That's amazing.
Yeah, it's going to be pretty cool.
So I don't have to give you my bank password this time?
Well, I'll still keep that, Matt.
Branch, secret code and everything. So you don't have to, people don't have to email Jennifer, ask for an update. And you're like, well, I still don't have your documents. Like, what do you mean?
Right.
And then they're searching for emails instead. They log in and they can see that.
Now,
Yeah, and
now they're
there's a
going to be like, I
checklist
can't
and-
figure out how to upload the documents.
Probably. Or still not understanding what 3 months means. That seems to be a challenge for many.
Why do you need a letter of employment? I told you I was employed.
Fortunately, Jennifer gets those questions.
Oh, Jennifer's the buffer.
She's the buffer. She's the good cop. Yeah.
Oh, okay.
Yeah.
You're bad cop.
I'm bad cop. When I have to call you to say we need your job letter, now you know it's really serious.
When you know stuff. Okay. Matt's my bad cop.
I believe that.
Yeah.
Yeah, I really believe that.
You get the first couple dealings with me, and you know if you see Matt, you've done something wrong.
You're like, oh, they want a price reduction.
Here it comes.
Matt, what's been going on with you other than being bad cop?
Yeah, I'm going to get a little serious for a few minutes because I got a reminder today, October 31st, that tomorrow starts the Movember campaign, which has kind of fizzled for the last few years.
Yeah, that was really big for a while, and it's just sort of...
Yeah, and we had one strong year as an office where we did a really good job with it. And
before you get furious, can I tell you that the one strong year we had in the office, I came back to the office late at night, and I hear giggling. And it's Jay Hazelwood, who's been on the show, and Jeremy with Just for Men, and they're dyeing their mustaches because they both have light hair, and they thought they weren't growing in.
That never happened.
Yeah, that definitely happened.
Folks at home, don't believe the lies. There's a lot of lies around the table today.
Which is funny because looking at you now, you have a very full mustache. It is very blonde.
It's a little orangey. Yeah.
He just had a hard time. It was like 7-8 days in, and he was just feeling like he needed a little more progress.
I feel like Matt would have a hard time. Matt's a very blonde human being.
My mustache looked pretty good by the end of the month.
Yeah.
The first week is a tough ride. It's a tough ride. But anyway, I was thinking about it, and I don't like asking people for money. I don't like fundraising that way.
Okay.
I don't like it. But the topic hits a little close to home. Last year, I couldn't quite get my head around it, but I am going to just bring it out on the radio that a colleague of ours... Unfortunately, a colleague of ours, Roland Colfus, he took his own life over a year ago, and so it does hit home. He's a guy I have a ton of respect for, personally and professionally, and I look at that and I wonder where and how can I make a difference? And I don't like asking people for money and campaigning this way online. So my campaign for the month of November is just that I'm not a psychologist. I don't know what to do, but for people who... Anyone who thinks they have somebody who thinks they need help, don't say to them, ask for help or do anything. Just say something nice. Just say, Jeff, I love being around you. You're a great guy to have around me. And maybe if you want to start a conversation, say, hey, Jeff, what makes you happy these days?
Yeah.
So what's going on? What makes you happy these days, Jeff?
Oh, well, you got me all thinking big thoughts. Although the one nice thing, I mean, Roland was a big part of our Movember campaign. And when I was a kid... He was a big part of all sorts of fundraising. Him and my dad and some of the older guys at the office used to do a ton of big charity fundraising work.
He was, and he's not the kind of guy. For me personally, I knew him for a number of years. Never knew that he was fighting depression and other challenges. So we never really know, and that's why all I can do as someone is just say to the people around me, "You're not a burden." You know, I'm happy having you around, and I want to hear the happy thoughts that are in your head because everybody's got some somewhere.
Right.
So that's me throwing to you, Jeff.
Okay.
What makes you happy these days?
Well, I am pretty happy. So when I first started using video in my marketing, the first thing I did was a company called BombBomb puts together a list of who they call the most influential realtors in video. And they picked like something like, I think when I first looked, there were like 25 people on the list. And when I was trying to figure out ideas on how to do video and stuff, I got a hold of that list and I started watching all those guys' stuff because I'm like, okay, well, these are the guys who are doing well at it. They are releasing their list tomorrow, and they sent me an email that I'm on the list. So I'm pretty excited about that.
Yeah, that's a nice affirmation.
Yeah, I'm very excited about that. So that is definitely something that's making me happy right now in response to your question. And I don't I don't know any more info other than that at the moment. They just sent me an email being like, hey, we need to check that all these links are right. And I was like, why? And they're like, oh, we're putting you in our video influencer guide. And I was like, holy moly.
Is there going to be a party?
I would imagine there has to be a huge party at my house, maybe.
You're definitely going to have to host it.
Yeah.
You should video it.
Yeah. There we go. That's thinking. So maybe enough of that nonsense. Before we get into the really sexy topic of alternate lending, what do we got for the news, Matt?
I've just been handed an urgent and horrifying news story. And I need all of you to stop what you're doing and listen.
I got a news flash for you, Walter Cronkite.
I am enlightened.
Do it live! I'll write it and we'll do it live!
This is Multiple Offers, a real estate show.
Today's news is last week's news. We mentioned it in the last episode. That the news was the Bank of Canada announced a rate increase. I could quote a number of news outlets, but virtually every one of them wanted to quote it because it's national news. So I'm going to look to Stephanie to help us get some of the information right on the news. So the announcement came. So the Bank of Canada announces a rate increase, and that increase is in what amount?
Quarter point, so 0.25 of 1%.
Okay. And when does that take effect?
It took effect last week. That said, every lender could choose their prime rate increase when they choose, but of course, most of the time they enact that right away, which they did.
They did, like the day after?
Yeah.
Okay, so most every lender enacts that the day after. And what about rate holds? So some people have come to you for a pre-approval. You've got a lender who's given them a rate hold.
Yep, that's usually on a fixed rate, though. So you can't hold a product per se. So the variable rate, which is what's affected by an overnight rate increase, that is going to change, of course, anyway. A variable is just that. It varies based on what the overnight or prime rate is.
What?
Rate holds are based on fixed rates, which are actually different.
So when could we expect to see fixed rates change?
Well, there's a couple of specials. Scotia's had a really good special out for the last about 2 months. Technically, that's coming to an end at 9 Pacific time, midnight Eastern. So any deals
tonight?
Tonight.
And so if you're listening to this, it's too late. It's too late. Yeah.
Yeah, but they're just going to go to what the rates are that everyone else has already gone up to. Fixed rates aren't necessarily tied to the overnight rate, so it's hard to say they will always move in sync.
Okay.
Is that typical though? If you do see like within a few months, perhaps maybe the
even
fixed rates
shorter
change,
time, but they're both tied to the
things,
economy,
right?
yeah, but not necessarily tied to each other. So fixed rates are based on the bond market. So that's the bonds have been getting stronger and going up, of course. So then fixed rates are going to go up along with it.
Jeff, did you have a question?
Go for it.
Okay, I have a question. It's two-parter.
I didn't agree to 2 questions.
Do you guys, part 1, do the mortgage professionals, do you guys call them BOC? Bank of Canada? Is there, no?
I haven't, but we could start that.
BOC's
maybe.
done it again.
Yep. If you want to trademark that term,
So
Jeremy.
glad I let you go first.
Okay. And then another question is, do you ever see... are there ever any like deals for people that just did like, okay, if you lock in, we want you to lock in. So I'm already with Scotia, I'm variable, and all of a sudden like, oh, that must suck that the variable just went up, and like all these variable people might want to lock in if it was significant enough. And I'm not saying I would do that, but if somebody did, is there ever like a special product for those people coming from one of their variables?
Not necessarily.
Or no,
no.
you're just
they're
screwed.
always going to base it on the client. So they're going to look at what they think that they want to offer you. One thing when you're with a variable that I do generally discuss this up front when we're choosing the product and the lender for the client. If you're with a monoline that doesn't have posted rates, you're generally going to get their best rate at conversion. So if you're on a variable and you're locking in, if you're with a lender that doesn't have posted rates, there's really not as much negotiating room there. If you're with a lender like a bank, a chartered bank or credit union, their posted rates, which nobody really takes, there's quite a lot of room to negotiate. So you don't know what you're going to be offered because there's so much more wiggle room that lender has.
Okay.
So historically, when the Bank of Canada announces a rate increase, I know it doesn't affect the fixed mortgages yet. Do you see a rush on applications for people trying to get a rate locked in before things have changed usually?
This particular time, yes. And I think it's because the announcement came with some...
There's a lot of news around this one.
Yeah, and there was a lot more certainty that there's going to be further increases coming. Though there has been for the last year or so, I think this time it was definitely more definitive that we're going to see another increase very shortly and then another one probably soon after that. So more people are rushing. That said, with my client base, they all know, most of them know, to call me first, email me, and then we can chat about it because it's not necessarily the right move for everybody, right?
Follow-up question. I'm on a variable.
Me too.
Me too.
That's my question.
Should I lock in?
I can't answer that without reviewing your file, Jeff. We have to chat about it.
Let's get into it. He's got some papers beside him.
So for our listeners...
This whole episode is just a trick to get some free advice.
To be honest, I wouldn't answer you yes or no anyway.
I know, that's why I asked.
Because I'm damned if I do and damned if I don't.
Can you give our listeners who are on variable and are anxious just some basic frameworks? Like what should they be considering? Should they just, all of them, just be calling their mortgage broker or representative and say, give me some advice? Or one or two good questions they could ask their advisor?
Yeah, I think, and anybody, I'm assuming most mortgage brokers would probably feel the same. It's really a personality profile. Someone who's in a variable, it's the same as investing,
so
right?
Matt should lock in, but Jeremy maybe shouldn't.
I live life on the edge. I love the variableness of the variable, up and down.
Some clients, if it's the same as investing, right? Some people are a little more risk averse and maybe shouldn't have been in the variable to begin with, and that's where you kind of have to do your homework in the beginning. Those clients, maybe if you're going to spend your life stressed out about your variable interest rate, maybe not the best product to begin with. And the same as investing. Some people go into higher risk mutual fund, some go into less. It's all a personality profile.
One question they could ask their advisors or broker, what should they ask?
Oh, Steph avoided your question.
One question they should
Expert
ask.
move, Steph.
Do you have high intensity?
Well, one thing they could maybe ask about is, have a threshold. So say, okay, here's where I'm willing to go up to on a mortgage payment per month. What does the interest rate have to get to before I'm at that? And then that might be a good way.
That sounds like a really good way of framing the question to get a good answer, Thank you. Okay, so these Bank of Canada rate announcements come. They always seem to... I always tell people, I'm like, I don't know if they're actually going to make an announcement to change the rate or whatever it is. First question, how frequently did these decision makers meet?
I think in 2018, they're scheduled for 8 meetings.
You're talking about BOC?
BOC, yeah. BOC.
8 meetings?
BOC.
I thought it was like every quarter maybe, but...
No, they meet more frequently.
So
than
potentially, if they wanted to, no, of course, this would probably never happen, but they could make 8 rate increase announcements. Every meeting could come with a rate increase.
Or decrease.
Or decrease, of course.
Yeah.
Sure, could go
if
both
they
ways.
wanted to. I don't think it's ever happened, not that I'm aware of.
Unless the guy down
Matt
south
is demonstrating the personality type right now.
Okay, but they have the authority to make the change every meeting if they choose to do so. So then, in your experience, is it every 3rd or 4th meeting they make an announcement? Is it just you never really know?
There's no way to predict, and we actually went for a little over 5 years without a change at all. So 5 years of 8 meetings a year, no changes.
And then we see predictions where people say, this time we think the Bank of Canada will increase it. And then they don't. And then they make another prediction. I think they will. So there's never really any solid way of knowing it's coming. You're just making your own sort of guesses on the economy.
There's some factors, though, right? Like what's going on with the economy, inflation, people working.
Yeah, they're going to look at quite a range of different
GDP,
economic factors.
if you
So
will.
exactly, job numbers are a big one. But the main thing with the overnight rate is inflation. There's always this balancing act and this teeter-totter, right? The key inflation, the target rate is about 2%, so they have to always look at that and how close are we there. So it's always going to be based on quite a number of different economic factors before they make the decision. And that's why it's sometimes harder to predict. It's not like a bond market where it's tied to the markets. Fixed rates are tied to something. The overnight rate is the Bank of Canada's
What they feel like
decision.
for the direction they want to go. BOC. Classic.
Did Jeremy just make this up on the spot and now we're running with it? Is that what's happening?
We'll see if it catches on. If I start hearing it at industry events, I'll let
craving
you know.
Chinese food all of a sudden.
Okay, well, we're totally geeking out on interest rates. I'm really curious to learn about alternative lending, so let's talk a little more about that.
Now you want to get nuts? Come on, let's get nuts.
You decide your own level of involvement.
Well, I guess this is a case where we'll have to agree to disagree.
I don't agree to that.
Neither do I.
Wrong.
National debt.
Wrong.
You're not advocating.
Wrong. With that money, lost one.
Very nice words, but happens to be wrong.
You're listening to Multiple Offers, a real estate show.
So it is main topic time, and the reason we're talking about this actually is I saw Steph a few weeks ago and said, "Oh, we'd love to come on and have you back on the show. Matt's been pushing it for a long time. We gotta get Steph back. We gotta get Steph back." And when I asked Steph to come back on the show, she immediately was like, "I want to talk about alternative lending." So Matt, Jer, and I probably have no idea how this is going to go. So why don't, Steph, if you want to just give us a little background on why this is a hot topic right now. Like, let's start off with, how do we define alternative lending?
Well, it's basically anything that steps outside of the traditional lending parameters. So the banks and credit unions and what we call it A lenders.
Okay.
They're governed by the federal government. So OSFI controls the lending guidelines and parameters to what those institutions can lend on. And those parameters over the last number of years have become more and more and more strict, increasing restrictions on what they can do.
Yeah.
So it's really forcing a lot of borrowers to, if they want to buy, or they're wanting to refinance or do things, sometimes they're now more than ever having to step outside of those A lending guidelines because they just don't fit anymore.
Do the credit unions fall under the A lenders?
I would say yes. Most of them do have a B component to them.
Because they don't have to follow all of the rules that
not the
banks
federal
do,
rules.
right?
Correct. They're not governed by OSFI, which throw out these wonderful terms, is the Office of the Superintendent of Financial Institutions. So that is the federal government.
Are they related to Bach?
In that they're federal, yes.
Okay, yeah. Cool.
I think you guys think that this is so much funnier than it is.
Just trying to get my hooks in, Jeff.
But the credit unions are actually provincially regulated, so they're not governed by OSFI. That said, and I don't know if it's ever been confirmed, so I'll throw out a rumor. When the new stress test guidelines were imposed January 1 of 2018, the credit unions didn't technically have to follow those guidelines. What I've heard, however, is that CMHC, which of course is federal, kind of threatened them in a way and said, you guys either start lending based on the parameters that we've set out, or we're going to pull your CMHC access. So even though it's not being announced.
That's quite the hot gossip.
It is gossip, and I have no way to confirm it, so I could
You heard it here first, folks.
Yeah. But it is kind of forcing some of the credit unions to maybe
So there's a lot of pressure.
up. Yeah. I think the fear was, and this was certainly on the mortgage broker side, when we did hear that the credit unions wouldn't have to necessarily follow it, we thought, okay, great, we'll at least still have those credit unions to go to, but they're really not that much looser than
I guess there's some fear that everybody would flock there,
Yep.
right? And then so the premise of having these protection measures in place, they lose all effect because the people who need the protection aren't getting it.
It levels the playing field
Yeah.
a bit too, right,
Yeah.
for them.
Well, not to mention the credit unions too. They're accountable to their shareholders, which is everybody who is a membership at that credit union. So now all of a sudden you're getting people that don't qualify at the banks all coming to you. Are those the A clients that you really, really want
Yeah,
to
so you
constantly
have
be
a
lending
more
to?
high-risk portfolio overall, right? Which is
Precisely.
not what you want.
Yeah.
So when we're talking about these alternate lenders, who are these guys? Like, is this a dude in a van? like who?
Is Sharon an alternate lender?
So alternate lenders can be actually, some of them are actually OSFI regulated. So just as an example, Canadian Western Bank, we all know that's an A lender. They actually have an alternate side, which is called Optimum Mortgages. The difference is their lending parameters that were approved by OSFI are a little more lenient. So OSFI already approved that they can lend in this direction. So for instance, where the banks can go to a maximum debt service ratio of 44%, Optimum can go up to 50%. And they can use some different means and documentation to support the income than, say, the banks can, just because their lending parameters that were approved were already a little bit more
And
wide.
how did they get special treatment? Like, did they?
this is going back a few years. All
Yeah.
of the banks were basically told by the government, you have to, on your own, come up with what your lending guidelines are going to be, submit those to us, and we'll kind of rubber stamp it and say yes or no. But if
Okay.
you step outside of what the lending guidelines are that you've laid out, now apparently the CEOs can even be personally liable.
Yeah.
So the banks are very, very hesitant to go outside of what their lending guidelines are, whereas with places like Optimum, Home Trust, some of these what we call B lenders, they've already told the government, here's how we're going to lend. We're going to increase the interest rate to offset our risk. But once they've been approved to lend in that way, they're actually allowed to.
So what does this mean for your clients? Like if I'm right on the edge and I'm having trouble with an A lender, how much better of a mortgage can I qualify for if I go down this alternate route?
Well, if you're, it depends on the circumstances of that borrower. So if it's a credit issue, that might be one thing. If it's proving income, so someone who's maybe self-employed,
Like I'm a server at a restaurant,
and you get
or-
lots of tips, we can actually look at bank statements and total up the tips that aren't showing on your tax return.
Because the
maybe.
banks hate that.
They're not a fan of it.
Right. Yeah.
Yeah. So there's some of those types
Neither
of
is
things.
CRA.
Yeah. Yeah. So there's some alternative ways that we can establish what that borrower's actual income is, and that's kind of in that B space. They're going to be a little more restrictive in terms of how high of a mortgage they're going to give you. They're not going to be able to go up to 95% of the value into a high ratio space, but there's a little more leniency there. And then, of course, further on down the line from that are your private lenders. And those are the
And
guy,
that is the guy
with
in the van.
Yeah.
Oh, I knew he was coming.
Well, there's some that are individuals that will
Yeah.
lend their own money, but then there's also what's called mortgage investment corporations, or MICs, and they're actually a conglomeration of a whole bunch of different investors. You can put in, you've got $50,000 you want to put in. You can't necessarily get a lot of business just lending that out, but you put that into a mortgage investment
They
corporation.
clump you together with some other investors.
Similar
Yeah.
to like a mutual fund, and then you'll get your profits out of that. So that's another space that is even a little further down the line than the B lenders, because they're not governed by the government or not restricted. They just price based on what they see as risk.
And how many fingers and toes you have?
Well, actually, you know, in a lot of cases right
This
now,
is your second mortgage.
in a lot of cases right now, they're I've actually seen rates come down with the private lenders. I mean, compared to what the A rates and B rates are, than what they were a few years ago, at least in the ones that I'm working with, because there's so many people that would have fit into the A space a few years ago that can't. That doesn't mean that they're high risk. And these
is that 'cause of
private
stress
lenders
tests,
can see
though?
that because of the stress test, because of the clawbacks on equity lending. So it used to be if you had a certain amount of equity in a property, you could still
Right.
get in the A space. Now it's not based on equity at all. It's 100% on income.
So what percentage would you say, like, what percentage of your clients are still going down the A lender route versus the alternative stuff? Just roughly.
Yeah, certainly more now than ever. So as a broker about 15 years, I'm probably doing more B and private lending in the last year since January than I've ever done. I would say 1 or 2 in 10.
Okay.
We're probably, and for the first time ever, which is I think what started this whole conversation. So mortgage architects, I'm sure Mortgage Alliance does it too.
I've never heard of these guys.
They will send out a list of the lenders that mortgage brokers in our company have tended to use the most. And for the first time ever, private lenders have cracked the top 10.
Whoa. Wow. Oh. Huh. So you've got like, what is it, the big 5 bank? How many banks are there that would be in the top space?
Well, not all of them work with brokers, so it's just broker lenders that they're referring to. But that's a pretty good indicator of how many people out there in society are having to look at alternate means.
It's an interesting shift because this was, I mean, they're called, you know, alternative lenders because it was like a worst case scenario. This isn't working out for you in with these regular banks. So here's an option we could go, and there's always some sort of caveat or some sort of it's going to be this or that. But now, I mean, with stress tests, I can just think of somebody, you might have someone in a townhouse and they just want to make that just one jump to a detached house and they'll be good. And if they weren't stress test, they would be able to service that mortgage. They know they're going to be putting a student or put a basement suite in, which is going to cover it. So they're fine with the payment, but it's allowing them just to borrow enough to get to that point.
Yeah.
So it's not necessarily alternative other than just a different way
And that's a good example. I actually have a client doing that right now. They're going to be buying a home that doesn't have a suite already in it. So we're doing a 1-year term with an alternative lender. The rate's a bit higher, and there's a fee that's associated as well, a lender fee. But because there's just a 1-year term, in that year, they're going to put in the basement suite. And that will, presuming there's no more regulatory changes coming down, that will then, we've already worked out the numbers, be able to get them back into the A space.
So that's so that gives people a lot of some flexibility and options and working with that. So if someone's hearing that and thinking, oh, maybe this is something I should consider, what are you experiencing as the difference between the rates? So if somebody's used to, and I know obviously every rate's going to be different, every client is different, but as a general sort of rough idea, if you're hearing 4% from an A lender, what should you expect to see from a B lender?
Well, right now, the one that I'm just referring to, so a 5-year term right now at the banks, well, until midnight at least, is about 3.64 to 3.74. This deal I'm just getting approved on a 1-year term is at 4.05 with a 0.5 point lender fee. So it's definitely a little bit higher, but for a lot of clients, it's their bridge, right? They know that this is going to cost them a little bit more. The risk is there for the lender, so they have to price based on risk. But after that year is over, now they're going to be back to the A side. There's other people that are going to have to be longer. So we look at maybe a 2-year term in the B lender or something until there's always has to be an exit strategy, I think is what I'm getting at. You don't want someone ultimately to be
you
in the
don't
B side
date
forever.
an alternate lender long term.
Correct.
Okay.
Don't marry a B
Don't
lender.
bring home the alternate lender to mom. Is what I'm hearing.
It's a good analogy. We'll go with that one.
Here for a good time.
And,
not a long time.
And actually, the alternate lender, they're short-term too. They want to see, and part of my responsibility as a broker, when I'm submitting that file, I should be detailing the exit strategy for that client, especially the private lenders. They don't want their money out for 5 years with one client. They want to be able to turn that over faster. So if I don't include an exit strategy, that's actually more likely to have the deal declined even by a private lender if there's no way that client's ever going to be able to get out of that.
It's exciting stuff.
So would a 3-year term with the B lender be long?
I don't do a lot of them. It doesn't mean that they don't exist, but it
That would be considered long, though. So
I
1
do
or
a
2
lot
year.
of 1 year, yeah.
Okay. So on the 1 year, it sounds like you're talking about a roughly 0.4% difference. What about a 2 year? Is it any different?
Not a huge difference.
About the same? Roughly
Yeah.
the same? Okay.
For some people, though, and here's another example, someone who, one recently is a nurse. So she's just started out as a nurse. She's actually working 2 part-time positions instead of 1 full-time position. Well, unless you're guaranteed hours, you need a 2-year average of that income to be able to qualify with an A lender.
Right.
So we're doing a 2-year for her because we know in 2 years it's going to be a different picture.
Right. You'll have a more complete employment picture and then a lot more attractive to the A lenders. Any other thoughts or questions on alternative lending?
No, I mean this is all pretty new to me.
Very new.
I knew that what you were talking about groups getting together to invest money into mortgages existed because those guys came to our office one time and pitched us as a way to invest our money in that. Mm-hmm. But that was the end of my knowledge of it, was that kind of aware in my headspace that it existed sometimes. Mm-hmm. But I guess because our clients often don't tell us the specifics of their mortgage details, usually they just say, yeah, Steph says I'm all good. She's got me set up. And we're like, okay. And then away we go.
Yeah. And if it gives you any more of a clear picture as to what's happening now, there are a number of those lenders that used to be, I'd just say, hey, I need a $250,000 first or a $75,000 second. And it was just assumed that it'd be not a problem. We could go ahead. The problem now is a lot of these lenders are out of money. So even though they want to lend, there's such a huge demand for alternative lending that a lot of them are frequently out of money, or they'll have a maximum as to what they'll lend to one client because they just don't have the funds. So there's a huge draw to these lenders now, which to me seems somewhat counterproductive to what the government's intention is.
Sure.
But it is what it is, and people are still going to need to house themselves until we see prices drop so much.
Could you see them cracking down on these in the future? Because, like you said, they've potentially threatened the credit unions if they get word that there's this, these other people aren't, I guess they don't need to adhere to the OSFI rules, but
Yeah, as long as those private lenders are staying in the guidelines of what the Bank Act sets out, you can't charge anything more than a 60% interest rate, those types of things.
Oh, is that all?
Yeah, only 60. I've yet to see one at 60, but they may be out there. But as long as they're staying within the confines of what's legal, I don't know how much they can.
How do you stop somebody from, like, a private loan is a perfectly legal thing. Yeah, that's interesting.
Yeah. That said, there has been, and it's interesting to see, if you Google something called, Google shadow lending, this is a term that's been derived.
We had shadow flipping.
Shadow lending, which maybe it's good and scary sounding for Halloween.
It is.
But this is something that I actually think that term was derived probably from within, I'm not going to use the conspiracy that it's government, but within someone that's trying to actually dampen people's views on what B lending or alternative lending might be. They're calling it shadow lending, and actually even throwing in the names of some A lenders that are probably even more rigid with some of their guidelines than the banks are. But First National was one that got thrown in there, and they are a very, very good, reputable A lender. Harder probably to get a mortgage with them than it is to most of the chartered banks. And yet this shadow lending term has been attributed to them in a Globe and Mail article. So
wait, it was the Globe and Mail? They love that word shadow.
Yeah.
They coined the shadow flipping term too.
Right. Yeah, because it sounds scary.
I'm scared just listening to
it. Can't trust.
Yeah, so it's something that I wouldn't be surprised if there's a bit of an orchestrated media campaign going on that side to try and tamper people's desire to maybe look at that kind of lending.
I get really frustrated as a consumer because I find that the banks have a lot of control over the message, even what the government is doing. They're so good at manipulating the government to change these rules and say it's better for the consumer when really it's just better for their bottom line. It gives them, a lot of these changes have given the big banks an easier opportunity to push out the alternative lending options. Not even alternative, like other A lenders, but just monoline, which for our listeners who don't understand is just a complicated way of saying it's not one of your big banks you're used to seeing, sort of brick and mortar style, right? So that stuff frustrates me, but that's what brings people to a mortgage broker, right? So you're here talking today about this because you're on the broker side. These B lending options don't exist if somebody walks into a big bank. Is that correct?
Generally speaking, most of the bank's managers, hopefully, have a broker that they work with. And if they can't approve someone, I like to think that they're responsible to at least pass the client on to a broker or someone that can help them access other forms of lending. That used to be the case back way a long time ago, 15 years
But now
ago.
the tellers are selling
but not necessarily
products, right? Like in some of these banks, they're encouraged. So you're not even going to get to a bank manager.
Well, once they can't approve you, though, under the existing rules, they're going to try to find some way to keep you on the hook and get something out of you. I have heard from someone I know who works at one of the local institutions, and they are telling me about their problems getting people approved and that they've had to refer stuff out.
Yeah,
for
hopefully they
alternative
are.
lending. Yeah,
because
so
a lot
they've
of
had to
people
go.
will just walk out and assume that there's nothing they can do and they'll be renters forever, when in actuality there are a lot of cases, especially if they've got any kind of a decent down payment. If you've got 20% down and even sometimes 15%, depending on your credit and your job, there are options for you to become a homeowner and not have to keep paying rent.
So Mortgage Broker can help sort of navigate things that way and give some different lending options. Sounds like there's some stopgaps, good transitions. So changing gears here, completely outside of alternative lending, but I do have a little curiosity just again about what a mortgage broker can do, because I find it really interesting, Steph, that when you look at a file, you can look at it and say, okay, I know that this client's particular situation is a better fit for one lender versus another. And you may choose to put that file at first in front of someone else. And it might be because the client is less risk adverse than another, and maybe there's a better option there as far as the contract goes. Or maybe, I'm curious if you have any other examples. I'm wondering about, for example, self-employed status. Like Jeff talked about a server who makes money on a lot of tips. Maybe one lender looks at it better that way. Are those examples of things where you might know that a lender looks at things through a different lens?
For sure. Yeah. All lenders, because of those parameters that they had to put out and get approved, they're all going to vary in some way, shape, or form, presuming it's a conventional file. I guess I should preface that. High ratio files, so anything with less than 20% down, that's all CMHC or high ratio lending. That those guidelines are pretty rigid, and that's going to be across the board, regardless of the institution. But once you're in a conventional situation, most of the lenders will have some little differences. So the most probably frequent one that comes to mind would be rental. So if you have a rental suite in your home, some of those lenders are just going to take 50% of that rental income and add it to your income. Some are going to do a rental offset where they take, say, 50% of that rental income and take it right off the mortgage payment that you qualify for. So that in itself can make a huge difference. So if you're on your own and you walk into Bank A and they try and qualify you and they say, well, no, sorry, you don't qualify for this, it doesn't mean that you won't qualify for it anywhere. It just means at that institution. But they don't necessarily know that Bank B will use a totally different calculation and may make all the difference.
Could that hurt someone's credit if they didn't go? They walked into a bank and they did that, and they got a no, and then 4 months passes, and now they try at a different bank. Could that look bad on someone's report if it was reported?
Constantly running your credit will eventually have a negative effect because it's just a computer. And the computer reads someone who's going from bank to bank to bank and having their credit run frequently. Why is someone seeking credit that bad? So maybe there's a problem going on. So the system, the system will.
That's amazing. You want credit. I have credit, but you really want credit. So.
You sound desperate.
Yeah.
But by being declined for something doesn't affect your credit. No. But numerous queries will. Okay. So again, one benefit to a broker is we run your credit once. It's attached to your file electronically. Even if I eventually have to send that deal to 4 lenders, it's only been run the one time.
Yeah.
So what about something like? Sorry, Jared, did you have a follow-up?
No, I was just saying that's good to know that that's still true. I mean, we tell people that, but yeah, it's good to know it's still happening.
So as agents representing a seller, we fill out a property disclosure statement, and that's the first line disclosure of anything that a seller knows that's wrong with the property. And sometimes I've noticed if even a box is checked mistakenly in the wrong area, it can really raise a red flag with the lender.
Mm-hmm.
And
these are questions like, has it ever been a grow-up?
Yeah.
Or are there mice in the property?
Or are you aware of a past or present underground oil tank for a house? And some sellers just mistakenly sometimes put the checkbox in the wrong spot.
I had a seller a couple days ago who accidentally checked no occupancy permit. And it just, no big deal. He just was like, well, I don't have that thing. And we were like, oh, okay, this is the same for new and old. It's just, but I mean, there's a lot of questions on that form. It's easy to get stuff wrong.
Yeah, and so if a seller does and it raises a red flag, is my understanding correct here, Steph, that if it goes to some lenders or any lender, some of those things have to be flagged internally, like in a nationwide system, that now every lender is going to see that and there's no hiding from it? In a sense?
Well, if it was a high ratio deal and CMHC became aware of something like the one you had mentioned about a grow up, once it's sent to CMHC and they're made aware this property was a former grow up, then that's going to be on their system and now they're going to know. So
there's now no shopping around. The buyer can't just say the borrowers, I'll just try another lender and go to them and I won't tell them about it.
Yeah. Well, not on a CMHC. They could try a different insurer because there's also 2 other insurers. Okay. I don't know if they share that information. I can check and see if they would tell me if they do or not. But yeah, and also I should also say too, as a broker, I'm supposed to let the lender know, hey, FYI, this was a former grow up. So.
And if you want to know more of Steph's thoughts on grow ups, we actually we gave some of your advice last episode, Steph, when we were talking about legalization. I don't know if you remember, I texted you some questions. So we read those questions. So your thoughts on grow-ops have actually already aired on the show.
Check what I said.
Episode 27.
27, last episode.
Oh.
Yeah.
I'll have to review that.
Oh, and I forgot to mention, if you're a regular listener and you didn't see any ads for our last episode, this made me really angry. Facebook pulled our ads because they said we were advertising illegal use of illegal substances for our grow-op episode. And I was so mad because I'm like, hey, we're not promoting anything. We're discussing, and it's not even illegal anymore.
Yeah, there's a little catching up with the times to happen with the Facebook and the Googs and those guys. Yeah, they think that we're trying to run drugs now on our podcast.
Yeah, the real estate show where we sell drugs.
The summary was, don't grow in your house because it could stigmatize your property.
You summarizing Steph's thoughts for her?
Yeah. Well, Steph's not really sure what she told you, so I'm just letting her know that,
You didn't say off the record or on the record, so she had no idea.
Yeah. Well, on that particular example, but the bigger one with the PDS that tends to cause some challenges from my perspective is that section about stratiforms. So even though I know realtors aren't supposed to counsel the vendors when they're filling that out, a lot of times people either get lazy or they just think, oh, well, I'll just check yes to everything. So when they check yes that there was an engineer's report done, for instance, because they don't want to actually find out and they just think, oh, it's easy, or they just cross it out and say, ask the realtor or ordered. When a lender sees, yes, there's an engineer's report, they presume that the owner of that property is going to know the answer to that question, and they're going to want a copy of said engineer's report. So if it doesn't exist, now we're going back and saying, oh, they were wrong. It doesn't actually exist. They checked that off in error. Sometimes that's okay. And depending on maybe the lender or the underwriter, sometimes it's not. And I've had incidents where we've now had to extend subject removal, go to the property management company and actually have them write a letter to say there's not an engineer's report on this file.
They love putting, I'm being sarcastic, they don't love putting things in writing. It's hard to get them even parking spaces.
Yeah.
We have a list of parking spaces, but we don't have the original document that says that you have this parking space, so therefore we will not confirm it.
Yeah.
And on that vein, maybe if somebody's looking for a faster approval or something to that effect, and it may not be speed, but you know that some lenders will always look at strata documents. Some by default may just not unless they're made aware of something else. So it could be a little quicker. Because I think you telling me the other day, one lender loves looking at documents and will look at them through a fine-tooth comb. And if they do, you better add 3 days to your subject removal or a week because, you're telling me privately managed. If you're a self-managed complex, just add
buildings.
a week because there's so much delay with documents. And I think you said the lenders really want to look at the documents. They typically do if it's self-managed.
They tend to more. I mean, there's no black and white, but yeah, when a self-managed building comes up, they'll scrutinize it a little bit more.
Yeah. So the things you know when you're on the inside, like Steph, right? So I like learning this stuff and hopefully trying to make the files for you easier so the clients go through in a smooth process. So that's helpful for me.
So now that you've answered our questions, maybe you can answer some more questions.
Check out the big brain on Brad.
How's that working out for you? What? Being clever?
Who knows where thoughts come from? They just appear.
You're listening to Multiple Offers, a real estate show.
Okay, so we put out that you were coming on the show again, and we put out a call to questions. I have a question from Duke, and Duke says that he is looking to end his mortgage early and looking at the penalty. And he feels like he's being charged too much, but he's not really sure how to figure that out. Are there any sort of standards he should be thinking about, or how is it just too late for Duke? Is this something he should have been looking at when he got the mortgage originally? How do you judge what's a fair and what's unfair as far as a mortgage penalty goes?
Well, I have personal thoughts on that for sure. I think, unfortunately, it's something that should probably be discussed at the beginning.
Yeah,
and it isn't always.
Because everybody's excited to get into a mortgage, not out of it.
So that's a good place to start. So this is something, just like the other terms of your mortgage, this is something that gets negotiated. Is this correct?
No. But every lender has their own way of calculating. So every mortgage contract has the same verbiage about penalties. It's going to be 3 months interest or the interest rate differential, whichever is greater. So what differs in that is how that interest rate differential is calculated.
Oh, sneaky.
So if you have a lender, and going back to what we were talking about those posted rates, there's a reason banks have posted rates.
Are they using their posted rates to figure? Ooh,
they are.
Sneak attack.
Where they get you.
They're not using the rate you have?
Well, they are in a sense. So what they're doing is, without getting too complicated, and this is why it's careful. I'll dumb it down for you, Jeff. This is why you have to be really careful. When you're going to a lender that has posted rates, every time you're negotiating your rate down, you're actually negotiating a higher penalty if you pay it out. Because they're saying the spread between the posted rate and the rate you get.
Yeah.
They look at that difference, and they will apply that same difference to calculate your interest rate differential penalty. So if you get a mortgage at 4% and posted rate was 5.5%, you've got a 1.5% difference or a discount.
It's not. Oh,
right. The interest rate hasn't even changed in the marketplace, and you're already behind 1.5 points.
Huh. A light
so
bulb
then
just
when
went
you're
on.
going to pay off your mortgage, they're
Yeah.
going to say, okay, you've got, say, 3 years left out of your 5-year term. Our 3-year posted rate is 4.5%. But remember, we gave you a discount of 1.5% off of that. So that's 3%. So now your interest rate differential is the difference between your rate that you got and that 3%. Whereas if you go to a lender that does not have posted rates, they're going to do what most of us would assume is the regular calculation. They'll look at the rate that you got on your contract.
Mhm.
They'll compare that to a new 3-year term, if the 3 years is what you have.
Comparing
and that's
that
the
difference. See, that to me is the instinctive way. In my head, when I hear
Mhm.
it's the differential, my brain says that's how it should be calculated. Now, all the major banks post rates, don't they?
They do.
Okay. We'll just leave that at that.
Yeah. So that's why when you're looking at 0.10 or 0.15 of 1% of
Yeah.
an interest rate on the front page of that very, very long mortgage contract, if
Yeah.
you're only paying attention to that one number, which is what we as a consumer society have been taught to do, that may not be the smartest move, but that's what we've been taught.
Okay.
Good question.
Thanks, Duke.
Thanks, Duke. That was a good question. And actually, one piece of advice for Duke, I don't know which lender he's with, but every lender has prepayment options. So if he has the ability to use some of that to reduce his balance, so if it's 10% or 20%, reduce your balance, and now you're calculating the penalty on a lesser balance, and that'll make a little bit of a difference. The only caveat is some lenders also have something they've thrown in there for this exact purpose, that you can only take advantage of that on your anniversary date of the mortgage. So, but most lenders, you should be able to reduce it.
Okay, well, thank you very much, Steph, for answering our questions. Now we're gonna get into a little Halloween scary story.
It's story time with Jer.
Great story. Compelling and rich.
It's not always my story?
No, it's not always your story. What if Matt has an awesome story to tell?
Well, he can tell it to me or write it down and I will paraphrase.
This is Multiple Offers, a real estate show.
So it's Halloween, and we totally put Steph on the spot. Steph, you're going to tell us a horror story?
Or a spooky story?
Oh, gosh, a horror story. Well,
no
let me
pressure.
think. Yeah. Horror
Dun,
story
dun,
for
dun.
clients. Well, there was one this past summer that was pretty horrible for the clients. So as we all know, we've seen a little slight downturn in the market. Things aren't selling the day they're listed.
Is that why they're not selling?
Yeah. We all knew it was going to happen, but unfortunately the timing of it was what nobody knew. And these clients got caught in that. So they wrote an offer on a house. Of course, multiple offers. They had to do what they could to try and make sure theirs was the top of the pile. And
This is not any of our clients.
None of
you're
your
about
clients.
Okay.
No, none of your clients. They were successful in their bid, but they did not have a subject to sale clause. So they did have a subject to finance, which we worked through, but they still removed subjects knowing
And they hadn't sold their house.
they had not sold their house. But they
I
had
don't like
lots
this
of
story.
time. Yeah, they had 4 months to sell. So they were doing some things to the property. They actually had a renter in the property, so they, were trying to get the renter to clean up as best they could before showings. Waited and waited and waited. Finally listed the property as the market was starting to turn. So, of course, they became more and more nervous.
This is a scary story.
I know, I hate this story.
They became more and more nervous as the summer went on. They were supposed to complete their purchase in it was late August, early September, and they were just not successful. And actually, I should preface, they did get an offer early on that they did not take.
No, it's a tragedy.
And we're not able to complete on their purchase. So at the last minute, we kind of rushed, and we were able to secure them private financing.
That's the guy in the van?
That's the guy in the van.
Not Sharon.
Did he have a hook hand?
Yeah.
That's
we
all the
did,
story needs is a guy with a hook hand.
and a patch. We secured an inter alia mortgage for them, which is one large mortgage over both properties. So the new property they were going to purchase and the current property, but it was going to be quite expensive for them. It was going to cost them about $20,000 in fees alone. An open mortgage, interest-only payments, but it would have got them to complete.
How does that work? Can they still sell their property and then it transfers over onto the...
Once they sell the current property, then that portion's paid off, and then we would have been able to put them into an A mortgage on the new purchase. But they decided not to go ahead with that. They thought it was too risky for them, and they just walked away and lost their $30,000 deposit. Fortunately, the vendor did not sue them for more.
The vendor just said, did they privately agree? We're going to keep the deposit and you're not going to sue us.
They did, yeah.
Ooh.
Well, at least that was a clean escape.
That could have gone much worse, I think.
Yeah, I mean, if the market dropped their value $60,000, there's a case there. There's.
Well, to my understanding, the vendor did sell for less than what their contract was. But at that point, I think the vendor was actually moving out of town, like somewhere up north of the province. And at that point, they just wanted, I think, to be done with it. They said, fine, we'll keep your $30,000 and move on. So for my buyers, they were actually fortunate.
Mm-hmm.
But it was one of those things.
Not fortunate, but given the circumstances, that's about as good as it could have
in the grand scheme of things.
Yeah, it could have been worse.
Yeah, but unfortunately, even on the day of subject removal, which is my job to make sure they understand, I did email them and say, you understand, you still have to sell your property before you can complete because you need that money for your down payment. So it wasn't that they weren't aware of what the risks were. They were caught in a changing market, and unfortunately, they got
and over the last 2 years, I think a lot of buyers were mentally trained that the selling part is going to be the easy part.
Mm-hmm.
Yeah.
The buying was the hard part. I'm going to have to write on maybe 10 off places before I get it. That's the really hard.
I think the realtor would be like, this is like things are changing, or your place isn't as good as
saying this was before the summer. Those warning signs weren't there yet.
Yeah.
And they got an offer.
I know, but we got 4 months. We'll get it.
Did they take a long time to get it on the market?
They did take a while.
Yeah.
And I do know the realtor is very experienced, and I also know these clients had purchased before. These clients knew exactly what they were getting into when they wrote their offer.
Yeah.
They knew and chose not to put a subject to sale because they had been watching the market. They had written numerous offers, I think, up to this point, and realized
they wanted to win.
They assumed that their sale would go the same as all these purchases they were trying to do and weren't successful. So I don't think it was that they were ignorant to it. I think it was literally just a matter of circumstance.
Unless you have a backup plan, though, don't make assumptions like that. Like you could own 2 houses, especially if you're going to delay it by months. We'll keep working on our house. What's the worst? Like it's going to change.
That's a spooky Halloween
Do you
story.
have parents or a couch full of money somewhere that because owning 2 houses could be very real?
Mm-hmm.
Do you have the means to own 2 houses, which it sounds like they just barely did?
And that was my question when we were in that phase of no subjects, when clients were writing offers with no subjects, when they would call me to ask if they could, which was always funny. Calling the person that's getting you financing to tell you don't need financing. My answer was always the same. Unless you have an ability to buy that property cash, no.
There were a lot of mortgage brokers during that time who were saying yes to people.
Mm-hmm.
I definitely had clients, unless the clients were lying to me, because I'd ask, I'm like, we're writing subject free. Are you really subject free? And all the time they'd be like, yeah, I'm totally good to go, blah, blah, blah. And then, and then the offer gets accepted and we need to get a bank appraisal and we need to get this and that and we need to get it.
I'm glad we're out of that phase.
Yeah.
Me too.
I'm really glad that's over.
A lot of them might not have been broker clients too. So I think most brokers were pretty cautious because our license is on the line, right? If we tell a client they can go in subject free and something happens, I can be liable for that. Whereas, good luck suing the bank.
Right.
Sarah, my favorite teller, said I could buy a house for $600,000.
You're really on the tellers today.
Well, there was all that shadow teller stuff that was going on last
all
year.
the shadow telling.
I heard it in the Globe and Mail. I learned many new things today. Thank you, Stephanie.
Thanks, Steph.
Thanks for having me.
Yeah, thank you very much, Steph.
We'll probably invite you back again sometime soon.
I'd happily return.
Next time Bach meets, maybe.
Yeah, we'll start that. We'll get that trend going for you.
When's your next? There's got to be. You guys have trade shows for mortgage people?
We do.
Okay, maybe you can next time at the cocktail hour or something. You can just
some
be like,
posters.
"Did you hear what Bach was doing?" And then they might just nod, be like, "Yeah, I know Bach." But then you just get it started there. I think.
We'll start a campaign, Jeremy.
Okay.
Okay, well, thank you very much for being on the show, Steph. If people want to reach Steph, we'll put it in the show notes, but they can find her at AskSteph.ca. Again, thank you very much, Stephanie Barritt. If people want to get a hold of Matt or Jeremy, they are at thenewwestguys.com. And if you want to reach me, Jeff McLennan, I am at realestatenewwest.com. If you guys have been enjoying this, please think about leaving us a 5-star review on iTunes. And please come back next week. I am tired of being outnumbered by the New West guys. I'm going to bring some backup.
Whoa! I just have to say again, that was really great having Steph on the show. I learned some new things.
Yeah, like shadow mortgages.
Shadow lending.
Shadow lending.
If you're going to call them shadow mortgages, they're associated with Mortgage Alliance.
I assume that you are being a jerk.
Anyway, I want to tell you guys something about what's going on at home that's been super exciting for our family. You guys
You're having a baby.
Definitely not having a baby. Science would say that's impossible at this point.
Yeah, sometimes it happens. Dr. Pollack might have something to say about that,
but you know that both of my kids are really short.
I do know that.
And one of them, we found out it was essentially a complete deficiency on growth hormone. So we've been supplementing growth hormone for 7 months now, and the growth is like off the charts.
Cool.
She's like 6 feet tall now. She's a little aggro.
And her voice got so much deeper.
It's not steroids. It's growth hormone. You got your 90s drugs mixed up, guys.
So this is Cameron.
Yeah.
And she was she on the growth percentile for her age before you started, or was she off the chart?
She was below the 95%. If there was a line for 0, she would have been below that. And
do you know where she is now?
She's almost into the zone of like the 95 or 5 percentile. I'm backwards. 5th percentile. She's closing in on it.
Oh, that's awesome.
So,
man.
but more important than where she fits on the chart is that the amount she has grown in the last 7 months is faster than the chart says you can grow.
Okay.
Then I was really worried because we went for a follow-up appointment with the specialist at Children's, and they check your growth and all the rest of it. And I was worried they were going to like dial back her treatment because they thought she was growing too fast.
So is she going to be tall?
She might. I mean, she's lost years of growth potential, so it's a little crazy. But they say that certainly she has the potential to be tall because I am.
You are a very tall man.
Yeah.
Yeah.
So it's happening right now. Her body's like, oh my gosh, growth hormone, I'll take it.
Which New West guy is taller?
Jeremy's taller.
And fatter. And a little hairier.
You're taller both ways?
Yes. Yeah. It's shoot, we're gonna have to update the graphics. That changes too much. And it's been pretty amazing. Back to the little one. No like adverse effects like joints or joint pain.
No growing pains, no complaints, no mood changes. She's just getting taller.
She eating more?
Yeah, she's eating more. She sleeps a little more. Obviously, like the body's just eating it all up, right?
Chugging 4-liter jugs of milk.
Yeah,
that's fantastic.
And it's like it's not the easiest thing to do. It's an insulin type injection every night.
Yeah,
right. So you have to subject yourself to that. But
shows up at the office once a week in styrofoam cooler.
Once a month.
So I'm the shortest person in my family. Where can I get these insulin injections?
There's a guy down by Columbia
in a van
station.
I will mention that your medical policy will get even more complicated if you want to try to add growth hormone to it.
I figure I can just add it to the cocktail.
Yeah, it's one of those ones that they get really particular if you qualify.
Yeah,
like we had to go through all sorts of tests to prove that this was medically necessary.
This isn't just, I want a taller kid.
Yeah.
Medically, she's not the height she's supposed. Her body
doesn't produce the hormones, so there is a medical deficiency. You can't just come in and say, "Hey, my kid's short."
I wish I was a little bit taller.
And back in our day, you would just start them in school later. That fixed the percentile issue.
Yeah, they didn't check birth certificates. You just showed up and be like, "This is my kid. His name is David, and he's short."
He's 5.
So
Don't worry about
it. Date of birth, I'll just make it up.
Yeah, I don't know what's that kid's birthday.
So here's the weird twist, though: is now that they've been monitoring, we've done the follow-ups. Growth or hormone production is clearly a bit of a deficiency within her body. Mm-hmm. So they're finding that her thyroid is a little off now, and they say that's not unusual with growth hormone problems. So her thyroid is a little slow, hypothyroid, which can make you a little bit sad and a little bit low energy. Now, you've all met Cameron. The low energy part probably isn't going to be a problem.
No.
I don't think we're going to notice her getting lethargic, just maybe staying within the walls now instead of bouncing off of them.
Yeah.
And then the emotional state, we'll have to see how that goes. Maybe she'll turn into a really sad collegiate volleyball player.
Well, and you have to be very on top of that one. My wife, Rachel, has thyroid stuff sometimes, and when you get sad from it, it creeps up very, very gradually. Like, it's kind of one of those things, like, you know, the analogy about how do you boil a frog? You don't throw them in hot water. You put them in the pot first, and then you slowly turn the heat up
with a couple bay leaves,
sure,
some spices, salt, pepper.
But that's how it works. Like, it's not like one day you're sad. It's you get just a little bit sadder each day. So you kind of really gotta watch.
They've been monitoring and checking her levels and seeing if it's like right now it's a really, really minor change. So let's just see if they've leveled off and everything's cool. Otherwise we supplement. And I mean, clearly her body just has a hormone production deficiency. So they just supplement the hormones and try to make the right cocktail.
And recognizing it is all it takes. Because like whenever Rachel gets out of whack, they just adjust the levels on her stuff that she takes, whatever it is, and then boom. It's just a matter of seeing it, right? You just have to catch it.
Exactly, yeah. So unfortunately, you start one drug, then you monitor, and you find out where you need to add something else to change this, and it's like, I'm happy, now I'm too happy, now I'm sad, now I'm tall, now I'm short, now I'm sad. But
science is amazing.
Generally, really happy with the outcome, obviously. Really good for her. It was starting to weigh on her a little bit, so being a little bit taller now is awesome. And
if she has any extra, maybe Jeff can have some.
I'm a perfectly acceptable height just because you two are giants.